this is your first time coming to our page, welcome. My name is 500K Trey. People also know me as Trey High Power. However, my real name is Travion Brandon, and I am the head portfolio manager here for Black House Management. Okay, so what I'm going to be breaking down today is the system that we trade here within Black House Management is called our Confluence Profile 500K model, one of one. Okay, and we only trade commodities here within our company, and we trade the primary asset is going to be GC, which is gold, as our primary leading asset, and then the secondary asset that we trade is CL, which is crude oil. Okay, but today we're going to be talking about a playbook within our CP 500K model one of one, and this is going to be the GC higher time frame Asia and London bounce from major key level 4.25K and a lower time frame entry continuation that ran for 4R 12 points. All right, so let's go ahead and get down into it. So the market playbook and breakdown. Now, every day when we approach the markets, when I approach the market and I approach my computer, I'm always thinking in this mindset, right? Our profession is managing the downside cost of printing high side returns. All right. I'm always thinking in that mindset, like, okay, my number one job today when I approach my desk is that I need to manage my downside cost of printing high side returns. All right. And just a little game, that was given to me, and I want to be able to give it to you guys, right? I always look at, trading as we're here to capitalize on a small window of opportunity, right? Everybody knows opportunities are widespread and few in between. Okay. So here in the market, obviously there's unlimited amount of potential and upside gain, right? But the true winners, and what we try and focus on here at Black House Management is the small window of opportunity, calculated risk to reward. Okay, and I'm going to repeat it again because it's very important. The small window of opportunity, and we need to have patience for the return. Okay, so let's go ahead and get down into it. So the structural setup. Now GC here on the 1 hour time frame. So this was our morning's breakdown of what we were looking at once we got to our computer. Okay, so as you can see, this took place at 6:09 a.m. Okay, as you can see, it was created by me, Trey High Power. If you guys, everybody know who a Trading View is, you guys know. Okay, so this is what I gave to our private Discord this morning. So GC, the 1 hour time frame, current PA here before NY Open. We have not yet established a playbook as price is nearing this higher time frame daily supply zone. Let's see if we can grab Wednesday's New York high liquidity, and then we'll read the order flow to see where we stand. We are trading around the edge of value, which is the value area high. So let's be patient and focus on our small window of opportunity, calculated risk to reward. So when we got to the computer this morning, as you can see, all right, we are creating an external range liquidity trend line. Okay, it's a descending. However, this is Monday, Tuesday, Wednesday. So from Thursday, as you can see, price started to rise. Okay, so New York's high on Wednesday has yet to be swept. Okay, that sits at 273.3. All right, so what I noticed coming into the market today is after New York session, when we came up and we tapped this external range liquidity trend line, Asia worked down slightly, basically down to the value area low, and then we pushed up, breaking that with a candle closure above, and we broke above major key level 4.25K. Okay, New York open, I apologize, London open, we pushed back down into the MKL 4.25K. We buyer supported, as you can see. Now we are riding above the VWAP, the green VWAP right here. Okay, and basically we pushed down into the value area, yesterday's value area high and point of control. So we pushed down into the value area high, yesterday's value area high. Okay, buyer supported it. We supported 4.25K during Asia and London, and we pushed higher. So that is why I said, all right, this was a higher time frame Asia and London bounce from major key level. Okay, so coming in today's session, this is what I noticed here on the 1 hour time frame. All right, and as you can see here on the CVD, prices slowly starting above, prices slowly rising above, all right, the EQ, which is 0. Okay, and we're getting that volume pushing upwards. So this is where I came into today. All right, so before we actually was getting ready to take the position, I noticed a news article came out, and you can go ahead and copy and paste this, and you can look at the news article for yourself. But it says gold rises ahead of key U.S. inflation data market talk. So obviously we pay attention to the DXY, which is the U.S. dollar. All right, because obviously they trade against each other, the gold and the dollar. Okay, so I guess in a simple world, when gold rises, the dollar falls. When the dollar rises, gold falls. In a perfect world, even though we all know that it's not perfect like that, but if you just want to be as simple as possible, they do coincide and trade against each other. Okay, so as you can see right here, the dollar has fallen negative 6.26%. Okay, and gold has risen over 60%. Okay, obviously this is throughout the whole year, right? But where we are currently, the dollar is falling. So gold price rises on a soft US dollar, with investors turning their focus to a key inflation print due later on Friday. So that was the news that was supposed to be dropping today. Futures in New York are up 0.2% around the major key level, which is 42.50 a troy ounce. While gold spot rises, we don't trade gold spot, but we do trade GC, which is the futures and derivative contract. The U.S. dollar index, which measures the greenback against a basket of other major currencies, is flat 98.97. So gold managed to hold ground, okay, after the latest U.S. job data did little to sway expectations of the Fed interest rate cuts next week. Okay, so traders are now waiting for PC index data for more cues on the path of the interest rate cuts. A lower interest rate environment typically benefits on non-yielding assets such as gold. Okay, so the expectation was for gold to continue to rise as the dollar is decreasing. Okay, so this morning when we look at the asset of gold, as you can, I apologize, not gold, but when we look at the DXY here on the 4 hour time frame, as you can see, the DXY has dropped dramatically. All right, underneath its external range liquidity trend line, we had a 4 hour high. We came pushed up, we swept that. Okay, we pushed down into this daily sub X level / this daily demand zone. We pushed up, okay, and the market dropped again. So the dollar, right, the DXY is extremely bearish, as you can see here today. All right, during New York session, the dollar was up, all right, 99 around 99.50, and then it fell all the way down. Okay, so the dollar was falling today. So this was a more added confluence as to why I'm looking to go long, and I wanted to target higher into that overall daily supply zone. Okay, so this is a daily supply zone, but as you can see, early New York, we're already trading around the edge of value. Okay, and this was the first main target that I was looking to capitalize on. This was the preset narrative that we were looking at. Okay, especially with the with the news being added on to this. Okay, we definitely had a long bias today going into the market. Okay, so let's get in down to it. So when we got to our desk, obviously you can see we have this internal range liquidity trend line. Okay, the volume point of control was printed around 255, the value area high. Okay, and I can notice that we have this ascending internal range liquidity trend line. Okay, so we came up into the value area high, had one failure, we had another failure. Okay, and now we're riding this internal range liquidity trend line. This is what the first thing that I noticed when we logged on. Okay, and started to pay attention. So the liquidity map. All right, so 5 a.m. pre-market NY. We had an ascending internal range liquidity trend that was being respected by buyers until we hit the value area high for the second time, sweeping the 5:35 a.m. high, and the sellers pushed lower, sweeping the internal range liquidity. Okay, so as you can see right here, 5 a.m. NY open, we rallied all the way up. Okay, this right here is the 5:35 a.m. candle right here, 5:35. Okay, we pushed up into the value area high. Okay, we respected the value area high, sellers defended, we pushed lower. Okay, we came, we pushed, and we hit this internal range liquidity trend line. All right, we also hit a key level that I'm going to start explaining later down the line, which was this 4260 level, this minor supporter and resistance level. Okay, but 535 we push up into the value area high. Sellers respect that, defend it. We push down, we hit this internal range liquidity trend line. We push up again. Okay, and the second time, which was at 6:10 a.m. All right, we hit the value area high again. We sweep out this high. All right, and then we come and we officially purge. All right, this internal range liquidity trend line. Price swept both 5 minutes. So, well, let me back up just a little bit. Okay, high and the sellers pushed lower, sweeping the internal range liquidity trend line. Price swept both 5-minute lows that touched the internal range liquidity trend line from 6:15 to 6:30, stopping out all those buyers building liquidity from the bigger move up. Okay, so what does that mean? So this is the 5-minute low. So we pushed up, we hit the value area high, and then we push back down. Okay, we create a low and then we push back up. So this is a low. We push up into the value area high, we have a slight reaction down, we create another low, and then we push higher. We break this high. Okay, so this is a 5-minute low, and this also 5-minute lows. This is also 5-minute, if you want to consider this a low, but it's really this candle right here. Okay, so these two lows, as you can see, we hit the value area high, we sweep out this 5-minute high, and then we come and sweep out this low, and we swept this internal range liquidity trend line. Okay, so this was basically an early this was a fake out for buyers looking to obviously rally price higher, looking to establish value at a higher price in the auction. It was immediately met with a fake out. Okay, sellers came and swept out all that, but however, this is just buyers building more liquidity for the bigger move to the upside. Okay, we had already had a bias in our minds that we wanted to go long. Now we're just looking for added confluence. All right, to fit within our CP 500K model, and then we would go ahead and execute. All right, now 5:30 a.m. and 6 a.m. both attempts to break out of value. The time and statistics were very strong. The buy volume looking to lift the altar, but met with no complementary order flow. Failed breakout, and we traded back into value, building more liquidity. So as you can see right here, okay, in the time and statistics, look at the ask. Okay, the ask went from negative 270. Well, I'm not gonna say negative, but 278 to 281. All right, and then in these two candles, it jumped to 683 to 789. Why? Buyers are becoming more aggressive as we hit this value area high. What happens? It was met with no complementary order flow. We're not ready. The auction is not ready to accept that value, and we trade back into rotation. All right, this is where we hit that internal range liquidity trend line, and we also hit this silent minor support and resistance level, which is at 4260. As you can see, we push up into this level 4260. Okay, then we get smacked down. Okay, we push up into it just slightly, then we push back down, and then we finally break above it. We come up into the value area high, and now we're using that past level of resistance. Now we're using it as level of support. This is just textbook. Okay, so when price hit the value area high for the second time, this is roughly about maybe 15 minutes before the open. Obviously, buyers are trying to get very aggressive here and lift the offer. Okay, we were not ready to accept value higher in the auction yet, so we swept out that internal range liquidity. Why do we do that? Because we needed to build more liquidity for the very big move up. All right, so buyer's absorption 4260 was a silent minor support and resistance level. Okay, this was this level right here, 4260. Okay, this blue horizontal line. Okay, we pushed up. Okay, failed. We pushed up one more time. We pushed down. Then we broke. Okay, hit the value high. We came back down. We used a level of support. Okay. 5:45 a.m. sellers push price lower, hitting the internal range liquidity / minor support and resistance level. This is this candle right here at 5:45. Okay, so we pushed down into the internal range liquidity, this trend. Okay, and we also hit the minor support and resistance level, which is 42.60. Buyers supported this level from sellers purging lower, and the auction continued to rise. Okay, 6:30 a.m. price returned back to this level, and we had a huge sellers enter the auction, hitting the bid looking to purge lower. The time and statistics: the bid jumped from 359 at 6:25 a.m. to 1195. Let's look at that. Okay, so 6:30 a.m. right here in this candle. All right, the auction is now officially open. Ding, ding, ding. Everybody knows that's the New York opening bell. Okay, so, and obviously, if you guys are saying, why am I saying 6:30? Because I live on the West Coast. I live in Los Angeles. Black House Management, obviously, our headquarters are established in Los Angeles, so we are on West Coast time. So we are 3 hours behind the East Coast. Okay, so 6:30 a.m. is our opening bell here. So 6:30 a.m. Ding, ding, ding. So the bid jumped from 359 to 1195. Okay, a huge amount of sellers entered this auction. Okay, looking to purge, all right, this low and purge this and break underneath this minor support and resistance level 42.60. The bid went from 359 to 1195. Strong volume. The delta went from -51 to a -501. A very strong delta. Okay, the max delta went from -86 to -501. So sellers are dramatically here looking to purge lower. Okay, the bid jumped 359, 11.95. The delta decreased dramatically from -51 to -5. I was supposed to say max delta. Please excuse me. The max delta went from -86 to -501. Sellers gave their best effort to push lower. However, all of that liquidity was absorbed by passive buyers. Okay, all of these passive buyers just sitting right here. Okay, underneath this 5-minute low, as we swept out all of this, looking to lift the auction higher, looking to lift the offer. All of that liquidity was absorbed by passive buyers looking to lift the offer and take the auction long. Okay, now the entry confirmation. At 6:35 a.m., once I noticed that we swept the 1-minute low, I'll show you that on a 1-minute time frame here shortly, and the huge bid entered with no complementary order flow from sellers, I market executed long above the minor support and resistance level, looking to capitalize on the auction's opening volume. Okay, and the bulls entered from the 42.60 support level, and the auction immediately started to rise back towards the edge of value, which is the value area high. Okay, so I'm going to, in the next slide, I'll be able to show you. Okay, because if you guys remember earlier, okay, when I first took the first screenshot of where the market was, okay, notice the volume point of control was around 42.55. Okay, but then when we came and swept out this low and this low, okay, at 6:30 a.m., okay, the volume point of control shifted. Why? Because an extreme amount of volume came into the market on the New York Open. Okay, now look at the volume point of control. It shifted up. Why? Because all of this volume, this sell volume that took place right here. All right, now I want to let's go ahead and zoom in and look at the actual cluster in the order in the candlestick. Okay, what I have here is a bid and ask, and I have the total volume, okay, inside the candlestick. So let's look at the 6:30 a.m. candle. So right here, as you can see, on the bid we had 259 contracts and only 22 on the ask. Okay, the volume was at 281. Look at all the normal volume: 12, 16, 21, 22, 14, 6, 6, 18, 10, 21, 11, 11, 24. Okay, that's normal volume. But look, at 6:30 a.m., 259 contracts hit the bid aggressively looking to tank this market. Okay, we got another 108, okay, here at this level, and only 4. Okay, so the volume was at 281. 112. In the very next candle, we tried to purge even lower. Okay, we have our huge big trades indicator on. As you can see, we got the big red bubble. We had 129 contracts hit the bid. All right, here, okay, and only 18 on the offer. We printed 147 on the volume. So look at all this volume of sellers looking to purge underneath 4260. Okay, this was that silent minor support and resistance level. Look at the bid. Okay, it went from 359 to 1195, negative 51 to a negative 501 on the delta. The max delta is basically how strong the aggressive selling was at one point in time in the bar. It jumped from negative 86 to negative 501. Okay, these are huge sellers looking to purge this market lower, but guess what? It was met with no complementary order flow. Why is all of the selling pressure taking place, but there is no there's no follow through? Okay, look at the price action. Price action did not respect that volume, and we did not drop. Okay, we did the exact opposite. We bought up, and this is where our market executed. Okay, now in this picture, because in this shot, I muted the volume profile so you can actually see the orders that went inside the candle. But as you can see, this was the volume point of control. The volume point of control immediately shifted because all of this selling volume that entered the market. Okay, and this was a big confluence as to why I entered this market. Why? Because when I seen all this selling pressure and there was met with no order flow, that means all of this selling was absorbed by passive buyers, okay, waiting here at this support level, okay, and this market immediately bounced. Okay, so here on the 1 minute time frame dome levels heat map, okay, as you can see, so we pushed down into this level. Okay, we had a slide reaction. We came back up into this, the first 5 minute low. Okay, so this is the first 5 minute low. We pushed back up into there, and then we came down and we swept out this level. All right, we pushed deep into that. We pushed deep. We tried to push deep into this 4260 support level. Okay, as you can see, we have the huge big red trade, this huge red bubble, which is a big trade indicator, letting us know that there is a huge seller that just entered this market looking to purge price. It was met with no order of complementary order flow because in this candle, even though we purged lower, we immediately had a strong reaction to the upside. I immediately market executed, looking to take advantage of that opening auction volume. Okay, everybody knows when the market right opens up, we get all this strong volume. So at 6:30, when we had all the selling pressure, no order, no follow through, I immediately market executed. And you look at this huge bull candle. We came back down to retest this level one more time, which was the silent minor support and resistance level. As you can see, is being used as level of resistance here. Okay, we broke above it, supported it, we came back down, we pushed back down into that level, we hit this internal range liquidity trend line, we supported, buyers bought back up. Okay, and so this is where we swept out this liquidity, we built more liquidity, okay, and we took this market higher. So the execution moment. All right, let's go ahead and just go over it real fast. The key influences. Why did I enter this trade? So basically, it was a 5 minute internal range liquidity sweep, and we bought from minor support. So the key influences as why I entered long. All right, so we had a higher time frame, 1 hour, and Asia London sessions rallied above major key level 4.25K and held. All right, we had a failed breakout early New York session, and we traded back into value, building more buy strength. 3:16 a.m. the value area high failure trades back into value, and we sweep the ascending internal range liquidity trend line. And two of the 5 minute lows were both swept, building liquidity for the bigger move up. 4:30 a.m. New York open, sellers immediately became aggressive, looking to purge price lower past minor support and resistance level 4260 with extreme sell volume but no complementary order flow. All right, the fifth and final confluence, I entered once we swept that 1 minute low. Okay, so remember, we had this low. All right, price came into here. This is just before, like 5 minutes before the open. We pushed back up, and okay, then we swept this low, and then we took up to the upside. This is basically the same exact trade that I took yesterday. All right, everybody knows. Okay, if you don't trade, I've been trading GC my whole career. All right, but gold will rise, sweep out all of the liquidity, rise again, sweep out the liquidity, and then the big move finally happens. And that's where we market executed and we capitalized on. All right. So I market executed looking long to target Wednesday's New York high, roughly about 12 points. Okay. And as you can see, now the market is rising, rallying in our favor. Okay. Look at that. We push down and then the market is rising. Okay. Now, I sold one contract off the table once I noticed we had a slight bit of hesitation here when we got to the edge of value area high. I market, I managed to partially secure one contract, and then I moved my stop above that last level, which was at 63.6. Okay, and then I just let the trade play out. Price continued to rise in our favor. I then managed to trail my stop even more, okay, because we had a sharp move up into New York. So that this was Wednesday's New York session high. As you can see, we had this big trades indicator. We had a sharp move up and then we pushed back down. Once I noticed that we had a big seller trying to sell here, I then managed to move my stop, okay. I moved my stop even closer as prices continuing to rise, okay. And then boom, price hit our target. Look at the time and statistics, okay? Look at the look at the ask, look at the delta, look at the session delta, okay? Everything was starting to print in our favor, okay? Even here in this candle, the ask went from 564 to 645, positive 1500. A huge buying volume stepped into the market. The delta went from negative 82, okay, in this candle to a positive 82. Huge delta flip. All right, remember, even in a 6:30 a.m. candle, it went from negative 500, and then the following candle, negative 82. All the volume was gone. All the volume was gone. Why? All of that passive buying, stepped into the market immediately, into the auction, and we lifted the offer higher. Okay, so it went from negative 501 to negative 82. All of the selling volume left. Okay, the delta went from negative 82, okay, to 72 in this candle, and then it jumped to 235 positively in our favor. Okay, the max delta went from negative 1 at the 6:30 open, okay, to a positive 90 to a positive 375. Okay, so the time and statistics was definitely in our favor here in the order flow. All right, beautiful. Price ran all the way to target. So the trade flow, and as you can see, is when we extended when I just went back to extend the actual internal range liquidity trend line, price basically is still respecting the trend line. So we tried to break above it, we pushed down, we came up, retested it, and then we fell off again. So price is just riding this internal range liquidity trend line. However, the trade flow. So price rallied in our favor as predicted and ran all the way to target, which was Wednesday New York high, securing 12 points with 3 points of risk. So we made 4R on the day. We capitalized on the small window of opportunity and managed to print a 4R return. Well done. So family, if this was your first time coming to our page, welcome. Okay, what I'm going to do is I want you guys to please like and subscribe to our channel. I'm also in the description. I will be dropping the Black House 500K Telegram. Please join the group, okay, as 2026 is going to be our best year to date. On Twitter, also known as X, please follow the company at Black House 500K. I will also drop that in the description, and please follow us on Instagram at Black House 500K. And I'm going to leave you with this. When it comes to financial risk management, here at Black House Management, our job, our profession is managing the downside cost of printing high side returns of money consistently through any market conditions. Done correctly, well, an abundance of fruit awaits us. All praise to the Most High. 500K Trey, we out.